Hey, hi. Good afternoon. This earlier this week, I was hosting a friend of mine from Hong Kong, who's an Indian, and he was visiting us for business, and we happened to be in Gurgaon. As some of you would know, Gurgaon is full of big malls, and in one of the evenings, we happened to be stepping out for dinner. And my friend was absolutely amazed at the number of people who were at the malls, buying, eating, having fun, engaging. And then, interestingly, I was telling him that how India is pegged at becoming one of the world's third largest consumer economies in another 6-7 years. That India perhaps has the highest number of working population below the age of 30. And all of these things point towards the kind of positive impact that all of this can have towards the growth of the Indian economy. And good afternoon. I think this afternoon I have with me a close friend of mine, Gautam. Gautam is a senior fund manager for the HSBC Asset Management Company. And this afternoon, we are going to ask him questions around what does consumption really mean for India? What does it mean for the economy? How can investors take advantage of it? Welcome, Gautam, and thank you for joining in.
Thanks, Eval, and good afternoon to all of you. And again, thank you for being here and giving us an opportunity to discuss about the growing theme of growing consumption in India. And we are really, really excited about this particular theme. And if I can probably just run you through why we are really excited about this theme. So I will just present you some slides which will give you some indication of why we are really excited about the growing consumption in India for next almost 10 to 15 years.
Gautam, I've got a long set of questions, I must warn you, which I already have. Okay. And as you present, we of course will get some questions from the audience as well. So you will get a barrage of questions from us. I must quickly warn you about that.
No problem. Your questions are most welcome.
Super. So you want to give us the background first, Gautam, of what we are talking about when we say consumption, and I think I'll actually lace it up with our first question, which I think is going to be very critical from your point of view as well. I think there's of course a very rigorous comparison of India and China, especially from a consumption point of view. I think there's comparison on the size of the economies, the level of consumption that is taking place, and how we are really getting to be a very competitive market vis-a-vis China. So let's start with a bit of a discussion around that. Your views. What do you have to say about that?
Yeah. So before I talk about the India comparison with China, just let me just give you a good idea about what things have happened in China in the last 10 to 15 years. So if you look at on the right hand side, you will see that there is a picture of Apple opening their first official store in India. And though it was a widely covered event by media, and you would have seen the similar photo in various news channel or the social media. However, the importance of this event is somewhat underappreciated. And the reason I'm saying that, if we take the example of China, Apple has opened their first store in China in FY09. And since then, its revenue in China has grown by almost 25 times. Now, we don't really know how the Apple revenue in India will play out over the next 10 years or 15 years. But the fact that Apple has been selling their phone in India or selling their product in India for last 10 to 15 years, but now they have decided to open their store, that really indicate and that they see the similar potential in India, what they have seen in the China. And again, what we have witnessed that once a particular country crosses a GDP per capita of $2,000, after that, their GDP per capita income has grown by almost 4x in the following 10 years. And this is something we have seen played out across the globe, where it has been played out in USA in 1950s and 60s. There are so many European countries. If we take the example of, say, Germany, the similar thing has played out in Germany in 1950s, 60s and 70s. In Asian, if we look at the Asian countries, it has been played out in Japan between 70s and 80s, South Korea between 80s and 90s, and China most recently between 2006 to 2016. And again, if we directly compare to China, and the reason we directly compare with the China is that India is very similar to China in terms of population. So if we look at the China, there has been a lot of similarity between the current India and the China of 2006, because India crossed this inflection point in 2019, and currently, if we look at the data points like, say, car sales of India or air passenger travel of India, the numbers is very, very similar to what China did those numbers in 2006. And after that, we have seen a J-curve kind of growth in China, both in terms of income as well as the consumption. And we believe that similar thing is going to play out in India, mainly because India is very similar to China, and India has the biggest advantage in terms of demographics, which is not there, which is something which is unique to India, where India is one of the youngest population. Again, if we tell about, there are around 95 million households which is currently there in India, and this number is expected to double in the coming 10 years. And if we look at the population mix, India is the youngest population, which you talked about, that median age is roughly around 28 years. And even after 10 years, there would be a substantial, even after the 10 years, the median age would be 31 years, where we will still be 10 years younger than the USA or China. Secondly, over the next 10 years, we will add the largest number of people to the working class amongst all the global major countries. So India will add a very large number of people towards the working class. All these people will be earning their income, which will give a rise to the household income, and hence they will end up consuming a lot more than what they have been used to. So that is where we are really confident that the growth which we have seen in China over the last 10 or 15 years, the similar growth is going to play out in India also.
So Gautam, if I could summarize, you're saying that anecdotally, what you get to see is that a whole lot of large consumer-led industries are coming up in India very fast over the last few years. Two, what you're saying is, from an earnings point of view, $2,000, if that's an inflection point, we've already got in there, and that is where I think growth really starts kicking up. You're also saying that from an overall behavioral point of view, we seem to be replicating what China has done about a decade and a half ago. So we are moving in that same direction. And finally, I think you talked about the middle class, and we would, of course, want to talk a bit about this as well. So this emerging affluent stroke, higher middle class, which traditionally has been at the lower end of the income generating segment. If you could throw a bit of light about what kind of contribution do they have from income generation, and when you talk about consumption patterns, is there something more that you can share as to what is happening in this specific segment?
Sure. So as I talked about, we will see that number of households which are earning, say, 5 lakh and above, they will almost double from say 95 million currently. But another important point I would also highlight that the people in the higher category income will, the growth in those category will be much higher if we take the elite, which is considered to be a 20 lakh plus kind of income group. The growth in those category would be even higher. Another just data point which I would like to share, if we look at the number of tax filer in last 4 years, the number of tax filer in 10 lakh and above category has grown by 50% plus versus the number of tax filer in below 10 lakh category, they have grown in a single digit. So there is a income growth, and second aspect of this growth is that the growth is higher in case of higher income. We will definitely, the higher income group is going to become much larger proportion of the overall population. Another important data point which we need to see from the mixed perspective is that if we look at though I have told you that India would still be the youngest population by 2030, if we look at the mix of population by 2030, the 3/4 of the population will comprise of millennials and Gen Z. These are the people who are born between say 1985 and 2005. And what we have seen that this newer generation tend to consume a lot more than the previous generation. The previous generation used to have a lot more focus on the savings, and only after meeting the basic essential, meeting their savings goal, they used to consume. That is not the case with the newer generation. They essentially, after meeting their basic essential criteria, they tend to consume a lot more, and the savings has become the third priority for them. And that is a big change which is happening. And as this population group will become large and larger part of the overall population, we will see again a much higher growth in the consumption than what we have seen in the past.
So, Gautam, two follow-up views here. One, of course, is you spoke about the savings rate, and that is a very interesting observation because Gautam, traditionally India has been seen a very high savings rate. I think Indians are seen as people who don't really spend too much but save. And when you see that rate going down, you are saying that money is getting into consumption very actively. Is that an observation that you have?
Yes, to a large extent that is happening, but that is particularly happening with the newer generation. And currently, say, if we take the mix of millennials and Gen Z, they are currently 40% of the population. But as they become, say, 3/4 of the population in the coming 10 years, we will see a far more drastic impact of this in the overall savings and generally on the consumption pattern. And that is where we are really excited about the consumption growth story going forward.
But Gautam, another specific point that I would want your views on is that for many years, when you talked about consumption, you really always spoke about consumption at the higher end of the spectrum from an income distribution. We are saying that middle class or the emerging affluent segment is growing rapidly. Is consumption becoming a more universal theme then across customer segments? Or do you see a difference, or do you see that it still would be concentrated on the higher income levels?
No, so if we see, typically what happens is as the income grows, after meeting the basic essential, we tend to spend a lot more on the discretionary item. So as the income grows, our spend on essential item does not increase in the similar proportion, whereas the spend on discretionary item actually grow disproportionately. And this is where even there would be a growth in every income category in this chart. If you see, all the household category which are 5 lakh and above is going to see a massive growth, and hence we will see a growth in income category across the board. And as the particular household meets their basic essential criteria, the balance amount is going towards the discretionary consumption. So what we believe is that going forward, there would be discretionary consumption will grow at a much faster pace than overall essential consumption. And that is where if you look at this chart, this is something which we have seen, it has been played out in various geographies across the world, and also it has happening in India also. If we look at, say, 30 years back, basic essential used to be almost 60% of the overall household expenditure. That has now come down to 40%. However, this number is still very, very large number. This need to again come down further. And if we again look at the other geographies, if you see the bottom right-hand chart, this essentially is the CPI weight of non-food and beverages item. So as the country's GDP per capita increases, the weight of non-food items in the CPI actually increases disproportionately. And so there is a very positive correlation which is there in most other geographies in the past, which we have seen. The same is going to play out in India also. And that is where we will see that there would be a growth in across category, but of all the discretionary item which is there. The grocery or essential item may not grow in a very high fashion, or the growth in those category would be slightly limited, but there would be a growth across the discretionary items. And this is something which is also reflected if you look at the top chart. We expect that India economy is going to become, say, around 8 trillion economy by 2032, which essentially implies around 10% CAGR growth. Again, overall consumption growth would be almost again similar to this rate only. However, the non-grocery retail is expected to grow at 2x of the grocery retail growth. And also this category will also grow at 2x of the growth rate which they have seen in the past 10 years. So that is one change which will be happen. And this growth will be there across the income group, not necessarily just the higher end income group. Obviously, there are certain premium categories which will grow at a slightly faster pace because of higher growth in those categories. But generally, we will see the growth across the income group.
So, Gautam, what you're saying is consumption is going to be a universal theme across consuming segments. Discretionary consumption is going to grow vis-a-vis grocery-based standard living segments. You also believe that while some segments may grow slightly more, but holistically speaking, discretionary consumption will have a much faster growth rate than overall segments. I think one of the other things that comes to mind is that because in India, the Indian industry is very sharply divided between the organized sector and the unorganized sector. And discretionary spending in many ways, to my mind, is going to flow into both of these segments. Now, what does this really mean? And is there going to be a sharp divide, or do you see that both of them put together will come back and keep pushing the economy upwards?
Sure. So that is a very interesting observation, and that is something which we have seen. If I take you through this slide, what we have seen that trade is gradually moving from unorganized to organized, and that is something which was happening gradually over a period of time over last 10 to 15 years. However, government has made certain reforms or certain changes which has accelerated this shift. If we take the example of introduction of GST bill or e-way bill, all this has led to acceleration in movement of unorganized to organized. And even there are certain sector-specific reforms. So if we take the example of, say, real estate, government introduced RERA bill about few years back. And because of which, if we take the share of top 10 organized player in the major real estate player in the major cities, their share used to be just 10 to 15%. And there was a very large unorganized developers which were there in these cities. But after the introduction of RERA bill, their market share has increased to 40 to 70%. So there is a massive shift which has already happened on the real estate side. Even if we take the example of, say, jewelry used to be just 5 to 6, organized players share in the jewelry market used to be just 6%. That has now increased to 35%. So 33%. So that is a massive shift which has happened over a period of last 15, 20 years. And that is something which we are seeing across the category. But this shift has accelerated in last 5 years because of the government reforms. And we believe that this is something which is going to continue. And again, so this becomes a very interesting theme for the consumption as we move forward.
So you are saying that there is a distinct trend of unorganized, of spending into unorganized sector, moving into organized sector. So government by regulation and design is enabling this, and there is a far higher tick up of unorganized sector coming into the organized sector, and hence taking advantage of this entire consumer drive that we expect to come over the coming few years.
Exactly. And basically, this is actually a part of a bigger theme, which is formalization of economy. And that is something, again, which has been happening, but government is really trying to push that. And again, that is, if we talk about another data point, if you see the number of people who is getting enrolled in the EPFO, there is a substantial increase in last 3-4 years versus what used to be in the past. So generally, economy is becoming more formalized. And this is leading to in lot of categories, trade is moving from unorganized to organized. And that is something which we will continue to see happening over a period of time in next 10 years or so.
So Gautam, when you're talking about structural changes happening in the economy, you talk about formalization of the economy. I think one key aspect that comes to mind is that of digitization. I think overall, there is so much that's going on in digitalization. India is expected to be a front runner in terms of how it's digitizing the public data infrastructure, how overall there is so much innovation happening on this space. Do you see this also impacting consumption in a meaningful manner?
Yeah. So that is again a very, very interesting trend which has happened. What we have seen that UPI has become the new cash. And people are using UPI to make payment for as small an item as a matchbox, which costs 2 rupees. So this is something which has a very, very drastic change which has happened over the last 5 to 7 years. And this essentially has reflected into digital transaction as a percentage of GDP. Their share used to be just 4.5% in FY16, and that has now increased to 76%. So that there is a massive change which has already happened on the payment side. So that is one point, but this is yet to reflect in the online shopping or e-commerce. So again, just to give you some context, India has roughly 1.4 billion people. Roughly 60% of those people have internet connectivity, but only 10 to 15% actually do online shopping. And if we look at the mix of these people who are actually doing online shopping, 91% of those people are actually the newer generation people, which I talked about, which are millennials and Gen Z. And right. Again, as they become much larger proportion of the overall population, the internet economies will become a very, very large proportion of the economy. And what exactly it will happen is that, firstly, why this is happening is mainly because newer generation is far more comfortable with using technology than the older generation. They have their old way of doing things, and they are comfortable with that. So that is one reason why this is happening. So, and second, very important point, as we move towards the digital economy, as we move towards where the e-commerce share or e-commerce transaction becomes a larger part of the overall economy, we will see again a higher growth in the consumption, and this mainly happens because of the discovery factor. Suppose when we physically go to store and buy any goods, we can choose only from the things which are available in the store. And there is a physical limitation in terms of the size of a store, where only a shopkeeper can keep only X amount of stores. Versus online, where everything is available, and we can select from the entire range which is there, and hence online shopping lead to a lot more discovery. Another interesting data point over in the online shopping category is that most of these e-commerce platforms, they use AI techniques or recommendation system, where once we try to buy a particular product, they will recommend you that you can buy another such product. So there is a lot more discovery, because of which we end up buying a lot more than what we are used to in case of physical store. And hence, as they become a very large part of economy, there would be again an acceleration in the consumption.
So what you're saying is, one is again, structurally, because of the payments of the entire public infrastructure that's getting created on digital, it is enabling an uptake of the payment infrastructure much faster than anything else, which is ease of payment, of course, then goes up. Second, what you're saying is, while at this point in time, adoption of online e-commerce is still limited, but that basically means that there's a scope to grow much faster over the coming few years. And three, you are saying that AI especially is going to enable increased uptake of consumption over a period of time. And these three things basically stand out. Now, holistically speaking, the companies which produce large consumption products, how have they been doing? I mean, if you could share a bit about how are these companies doing over the last few years? Do you see a significant uptake in their incomes? Do you see their returns on investments going up over the last few years? What's your sense of how are these companies performing at this point in time?
So generally, if we look at most of the companies in this space, they have been doing very well. Just to take you some example, we talk about shift of trades from unorganized to organized. So there is a company called Page Industries, and that if I'll just show you the performance of this company. So you see that this is sorry, if we take I gave you the example of jewelry segment where jewelry market share has moved from 6% to 33%, and this has resulted into Titan, where its revenue has grown at a 20% CAGR over a period of 22 years. So this is a very large period where the company has been growing its revenue year on year at a 20% CAGR. And again, if we look at the smaller bracket in terms of number of years, there are various periods where the company has been consistently growing. And obviously, because of such a consistent growth, such a high growth which is there, which is reflected into this particular company, the stock has been fairly rewarded because of that. Another example is of Page Industry, which is actually a play on the premiumization, but this essentially is again a very large consumer company which is there. And there also the revenue has grown at a 25% CAGR over a period of almost 15-16 years. And again, the stock has been adequately rewarded. So generally, if we look at the companies in this particular space, they are generally doing very, very well. Obviously, these are some examples. Even if we look at, say, overall consumption index, so what we can actually look at is that there is a NSE consumption index, which reflect the overall category or overall consumption growth in India. And if we look at the performance of that particular index over a period of, say, 3 years, 5 years, or 10 years on a rolling return basis, they have done far better than the broader market. And that is where most of these companies in this particular space is doing reasonably well. Obviously, there are some volatility on a year-to-year basis, which happens for all these companies. But if you take a longer-term period of 10 years, 15 years, this segment has done well, and we expect that the best is yet to come in the coming years.
And while these companies you're saying that have been doing well, CAGR has been very, very promising for them. And given what we spoke about earlier in terms of the opportunities panning out over the few years, we're saying that these companies will continue to do much better than they have been doing earlier. Investors who would have invested into these companies, what would their experience have been? Would they have been sort of gaining a fair bit, either in terms of dividends or in terms of overall valuations? Any insight into that?
Okay. So one thing, so we don't really have a fund, but if we look at the index return, this will give you some fair idea of how this particular theme has done for the investor, or this theme could have done for the investor. So if we, again, as I highlighted, if we look at the rolling return of the NSE consumption index versus the broader market, this index has generated an alpha of somewhere between 100 to 200 basis points over, say, NSE 500 or Nifty 50 companies. And this return has come on the back of lower volatility. So the average volatility in last 10 years for the consumption index has been around 16.6% versus say NSE 500 at around 18.1%, Nifty 50 at around 18.8%, and most other thematic category at there the average volatility is at around 22%. So the superior return has come on back of lower volatilities. So this essentially what we are saying, that this category can give you superior risk-adjusted return. So that is one point I am just trying to make. And another, if you take the consistency of the return, if what we have done is we have seen the NSE consumption index performance vis-a-vis the other thematic and other broader market indices, how that has done, how it has done. So in 8 out of 13 years, this indices has been in quartile 1 or quartile 2. So obviously there has been some years where this particular index has not performed well, but generally over a long period of time, we have seen a far more consistent performance from the consumption index than any other category. So that is where we believe that this category can produce a more consistent return, slightly better return for the investor at a lower volatility. And that is where we believe that the investor experience should be even going forward.
So risk-adjusted returns are going to be very well in this particular segment, and that's how you see going this return profile building up. I got a very interesting question on the chat, but before I get there, when we say consumption, how much of the Indian equity markets are we really covering in terms of the opportunity itself? So if you look at the BSE Top 100, for example, what kind of opportunity are we talking about? What is the scale of this opportunity that's there in the Indian economy?
Yeah. So if you look at the consumption, consumption is roughly around 60% of India's GDP. So even if we talk about in terms of GDP, consumption forms a very large part of our economy. And same percentage to a large extent is being reflected when we are looking at the listed space also. So what we have done is that we have taken not the BSE 100, but actually NSE 500 companies, where we have looked at 500 companies which are part of NSE 500 index and see which companies can be part of this particular theme. And we have realized that roughly 55% of those companies can be part of the consumption theme. And this is again across sector. There's not one or two sector which is there. You will see around 10 to 15 odd sectors which is there. And secondly, it is there across market cap. So it is a very well diversified theme which covers roughly around 55% of the market. And hence, unlike other sectoral fund or other some of the other theme, which becomes very narrow, this is a very, very large theme from the overall market perspective.
You're saying that there's a large broad-based opportunity available. It is not a very concentrated opportunity. So it is spread across sectors. It's spread across market caps for customers to really investors to really invest in. I think I'll come back to the question that came up. So the question is two parts. The first one is so what are your views on valuation of these consumption-led stocks? And the second one is, how long do you think will this bull run for the Indian markets?
Okay, so firstly, let me talk about the valuation part. Generally, let me first start talking about the overall market, and then I will come to the consumption part also. So overall, the concern on valuation currently is arising mainly because we have seen that the market has rallied by around 15% in last 4 months or so. And again, it is a sharp rally in a slightly smaller period of time, and that is where people are getting concerned. But if we look at the period of around 12 to 14 months prior to this rally, market was largely moving within a small band. Nifty was moving between the 6,000 to 8,000, 16,000 to 18,000 price point or index level. So if we look at the market return over a period of 18 months, then the market rally which has happened, it is to a large extent in line with the corporate earnings growth. So, and it is slightly higher than the corporate earnings growth, and which has resulted into the market. Currently, the market valuation is somewhere between half to one standard deviation away from the historical average. But this is the normal range of the market. Normal market always be some volatile. It will sometimes it trades slightly at a slightly premium to historical average, and at some time it will trade slightly discount to the historical average. But one standard deviation is the normal range for the market, which is what currently the market is. Until this market really goes towards a two standard deviation or higher, then only we will really get worried about the market. At this point of time, that scenario does not seem to arise. Second important point over here is that in terms of corporate earnings growth, we are expecting that over next couple of years, the corporate earnings growth is going to remain strong. If we look at say Nifty 50 companies, their earnings growth is expected to be somewhere between say mid to high teens. So this is a very strong corporate earnings growth which is going to come over next 2 years. And the reason we are very positive on the corporate earnings side is that if we look at the most high frequency data, which are getting reported on a monthly basis, they all are in the expanding trajectory, and they are in an upward movement trajectory. Though there has been monthly volatility which is there, but all of them are doing reasonably well. Second important point is that if we go back say 6 months back, there was a big concern on the inflation, and because of that, the RBI was continuously increasing the interest rate. So that was also a big part of the concern which was there for the market. But if we look at the current scenario, we have seen that the inflation has come down because of the correction in the global commodity prices, which increased during the COVID period, and after that, because of the Ukraine-Russia geopolitical conflict, those prices moved up very, very sharply. But in last 6 months, they have come down again very, very sharply, and because of that, the inflation has come within the RBI's comfort zone, and that is where, if you look at say last 3 months, RBI have not increased the interest rate. The most recent meeting which RBI did was yesterday only, and where there also they did not increase the interest rate. In our opinion, we are now very close to the peaking of the interest rate. There can always be 25 basis point hike from here onward, but generally we have reached the peak kind of interest rate, and hence generally as the economy, looking at the most economic data point, we are in a very, very comfortable place. So from that perspective, we are not as much concerned about the market, and we don't see, firstly, we are in the bull market at this point of time. It is a normal market movement which is happening, which is there. So that is where we are not that much concerned. Coming particularly to the consumption part of the valuation, the FMCG is one area where generally they have been always traded at a premium valuation. If we look at the and generally even other consumer companies are traded at a premium valuation, and the reason for some of these premium valuation is that these companies are much higher quality companies compared to say other cyclical companies. Their earnings growth is far more consistent. Their balance sheet most of them have a debt-free balance sheet. They have a very good management quality. Their return on capital is much higher. So overall, the quality of these companies are far better compared to some of the other segment of the market. And hence, these companies have always been traded at a premium. If we take the example of say NSE Consumption Index, currently, if we and then compare with say Nifty 50. Currently, say Nifty 50 market valuation is around, Nifty 50 is trading at around say 19.5 times PE, versus Consumption Index is trading at around 36 times PE. So it is trading at a significant premium to the Nifty PE valuation. However, Nifty is currently trading somewhere between 0.6, 0.7 times above the historical average. NSE Consumption Index is also trading at a 0.6, 0.7 times is its own historical average. The historical average of NSE Consumption Index itself is around 33, 34 times. So if we look at the valuation, obviously if we compare these consumer companies with the cyclical company, valuation will always look higher. But compared to its own history, the valuation is still again in the broader range of normal volatility, and hence generally even in the consumer segment or consumption related companies, we are not that much worried about the market in terms of growth prospect which they have.
So, Gautam, you say that the valuation concerns on these companies need to be seen slightly differently than the overall index valuation or the overall market valuations, because the right comparison would possibly be the same index rather than a holistic market index, because in terms of the companies and the sectors that we're talking about is very different from a general index in that sense. So and in your opinion, the second thing that I pick up is that you are saying this is not a bull market. This basically is a normal market where opportunities are reflecting in the valuation and the prices and so on and so forth. And going forward, you are not seeing a significant concern, especially in a medium to long term basis, given the story that we anyway have spoken about.
Exactly. So you have really summarized it very well.
Super. So Gautam, I think that brings us to what we really are really looking forward to, and this has been the new fund offer that the HSBC Mutual Funds is bringing to our investors. Talk to us a bit about what is the investment objective, and we had a range of conversations before we came to this point, right? Tell us about what are the 2 or 3 core things that you believe are really going to work in favor of this kind of a theme from a mutual fund investment point of view, which kind of investors should really invest here?
Sure. So in what we have seen that firstly, I have talked about there are 3 main enablers which will lead to a massive consumption growth in the coming year. One is which I have talked about is massive income growth, which will be going to happen. Second important point is that there is a easier access to credit, and because of that, we will see that credit will act as a second source of money to be spent towards the consumption. And just to again give you one data point over here, the credit card spend has grown almost 12x in last 10 years. So we have seen a massive growth in the credit because the taking credit has become a lot more easier right now compared to the previous 10 years back. So that will act as a second source of money, and that will also fuel consumption. And third thing which we touched upon was that there is a behavior change which is happening where newer generation tend to consume a lot more compared to the previous generation, and hence we will have a far greater growth in the overall consumption. So these are the 3 main enablers of the consumption. But in our portfolio, we are looking to have 4 major drivers, where certain categories of consumption will grow at a faster pace compared to the overall consumption growth. We already talked about digitization. We already talked about shifting of trade from unorganized to organized. Then there are other such areas. Is that penetration is another big area where there are so many categories where India is significantly underpenetrated, and we will definitely some of those categories will have a much higher growth. Then there is a case of or theme of opportunity of premiumization, where certain categories we have seen that the people are trying to move to more premium product, and hence the growth in some of those premium product is much higher than the overall category growth. So these are the broader theme which we will have in our portfolio. Apart from that, if we look at from the sector perspective, as I highlighted, there are so many sectors where this theme is going to be played out. What we will do is we will essentially go bottom up in terms of selecting the stock. Generally, we are not top down aware in terms of what is happening in the sector, what is happening in the overall economy. But when it comes to the stock selection, we are largely a bottom up stock picker, where we look at the individual company and decide whether it merits to be in our portfolio or not. And depending upon their growth outlook, the quality of the company, and how our conviction level in those companies, we decide on what weight we should have have in our portfolio. So the portfolio is largely bottom up. It will be largely across the sectors. Again, I talked about the consumption is a very broad theme where it covers so many sectors which are there, and we will try to have a more diversified approach, even say compared to some benchmark. So what we have seen that if we look at the index or which would be our benchmark, they tend to be very concentrated on one or two sectors. So if we take NSE consumption index itself, that has a 37% weight in the FMCG, where a lot of other sectors like say textile or media or healthcare, which are significantly underrepresented. And we are positive on some of these sectors also, and we believe that they are not reflecting, or the weight of those sectors are not reflected enough in the index, and hence we will have a far more diversified approach when we are constructing our portfolio. So you will see a far better representation of the of these sectors in our portfolio. Another important point is that if we look at the index, at least there has been certain sectors which are big enablers for the consumption, but that is not part of the index. But we will definitely consider in our portfolio. So because of this, you will see a far greater diversification across the sector. We will be mostly bottom-up stock picking, and also in terms of market cap, also we will be far more diversified than say typical indexes, because what we have seen that typically index again has a very bias towards the large cap. If we again take example of NSE 500 itself, 75% weight is there in case of 75% weight is there in large cap in this particular index. But in our portfolio, we will be far more diversified, where you will have enough representation of mid cap, small cap, and large cap. And hence, overall, in terms of the way we want to construct our portfolio, we will be far more diversified across market cap, across sectors.
So Gautam, what you're saying is, from an investment strategy, diversification remains a very core element of the portfolio construction. And because you've got a large range of opportunity available, you then have the flexibility of investing across market caps, across sectors, and hence the risk is minimized where the opportunity can actually be maximized.
Exactly.
Great. And Gautam, from an investor point of view, I mean, we all know equity funds are long-term and so on and so forth, but what kind of investors are you looking at attracting? Are they going to be across all age categories, all kind of investors, growth investors or those kind of things? Or do you believe that that this kind of a product has a place in some specific kind of investor portfolios?
So firstly, we believe that this is a very large theme, and this is a theme which is going to play out over next decade or so. So this is not something where we are saying that we are positive for next 2 years perspective or 3 years perspective. This is something which is going to play out over the next 10 to 15 years, and hence this is a very long-term opportunity which is there. So in our opinion, every investor should have this theme as part of their core portfolio, where they should allocate some money and then just remain invested in this particular theme. And given that this theme, and which I've highlighted, that volatility of the this theme is lower than the diversified fund and versus other thematic fund, the risk this theme can generate the superior risk-adjusted return. And in that context, we believe that every investor should consider this theme as part of their portfolio. So, and again, investors should consider this theme from a longer term perspective. It will be very difficult for me to say that this is going to definitely play out in next 1 year. But what I am very, very confident is this theme will definitely play out over say next 5 or 10 years. So that is something where we believe that the investors should come into this particular theme with a longer term objective, and they should make it as a core, as part of their core portfolio, where once they invested, they should just remain invested for a long period of time.
So Gautam, for any investor who has a long-term view on India and the India opportunity, this product must find a place in that portfolio. You're also saying that this is a long-term story, so we should not hurry in terms of a short-term view. If you have a long-term view of India, this is a great opportunity to stay invested in. And be it any kind of investor, we must stay invested in this product. This must find place in any investor portfolio in that sense.
Yeah, exactly. Because given that this theme can generate a alpha over a diversified fund at a lower volatility, this is again a very suitable portfolio for every investor. And again, they should be looking at this particular theme from a longer term perspective. So these are the two key messages I would like to give for the
Super. I think, Gautam, the message on diversification, the message on long-term story, the message on structural opportunity and that driving growth. I think the message on risk diversification and low volatility, I think the opportunity and alpha that you mentioned, saying that if you're good stock picking, then chances are you will be able to be ahead possibly of the market. Also, I think the vital question that I think you answered was on valuation, saying we should not look at valuation only from a market point of view. There is a nuanced valuation that we should look at. And that valuation doesn't necessarily look very high at this point in time vis-a-vis how that has been otherwise. But clearly an opportunity. I think that's the least that we can say about this, Gautam, is that India is going to be a great consumption economy. It is already going there. And this fund, I think, fundamentally comes at the right time for investors to start their exposure into a specific theme that is expected to drive the Indian economy over the coming few years.
Yeah, exactly. So again, if we see that India is currently in a sweet spot, what I have highlighted earlier, that we have seen that once the country crosses an inflection point, they see a very sharp growth in their income level as well as the consumption level. But once the base also become high, then growth also start to come down. India, so those countries, most of the other countries have gone through those phases. Again, if we take the example of US, the growth rate of India or emerging countries is far higher than the growth rate there in the US. So India is currently in a very sweet spot where the next 10 to 15 years would be India, which will be dominate in terms of growth amongst the global economies. India will become a very large part of the global economy. And that is where we have believed that India is currently in a sweet spot where they can show a massive growth in their income, they can show a massive growth in the consumption. And we all are consumer and we all tend to consume. We should also participate as an investor also in this great story which is there.
That's a super point. I mean, if we are spending and that spending is fueling the economy to grow further, we might as well invest in that sort of story and gain on the investment side as well. And that's a good point, Gautam. Right. I think I'll on that note, I think I'll thank you for the time that you spent with us this afternoon. Our viewers now, and obviously we will share this video. This will be available on YouTube for everybody to watch as well later. But this is a great opportunity. I think that is what we get to hear from Gautam. This is an opportunity, the story about India. It is an opportunity for us to really benefit from this great story and evolving story that India is really going through. Our request is to please reach out to us in any of our branches. Please reach out to HSBC Asset Management wherever you get to write to us. We'll be more than happy to help you take an exposure, invest into possibly one of the most dynamic opportunities that the economy faces. With that, Gautam, thanks a lot for your time this evening. We, of course, shall keep talking to you a number of times on this, not to mention come back to you with some more difficult questions. So appreciate your time, Gautam. Thank you and all the very best for the new fund offer.
Thanks, Abel, and thanks to all of you.
Thank you.